What's good, gang? Welcome back to my channel. And in this video, I'll be talking about Wyckoff, how I use Wyckoff, when I use them, the concepts behind Wyckoff, and how you can implement or incorporate the concept in your trading arsenal. If you're new to the channel, welcome. What we do at Xcapethematrix is we teach people how to make money off trading and actually escape the matrix and not having to live paycheck to paycheck. That's the goal of this channel. And I welcome you guys. Like, subscribe, and any question you have, you can ask me on the comment section. Let's go straight to it. So Wyckoff, there was this guy named Richard Wyckoff, and what he did was he was a stocks trader, and he noticed something about stocks, not just stocks, the market in general. He noticed that the markets undergo phases of distribution and accumulation. What is accumulation? Accumulation is this schematic, and the simple form of definition of accumulation is simply the transfer of cells on behalf of the masses into buys on behalf of the composite man or institutions, banks, whatever you want to call it, the algo. I know some ICT traders call it the algo. Still the same concept. Okay. So accumulation is the transfer of cells into buys. Because as we see here, most retail traders, emotional traders, newbies with little information about the market, when you start out, firstly, they teach you how to trade with trend lines. And it's the institutions, they know this very well. They can easily spot out where most liquidity will be rested in, or where liquidity will be rested at, rather. And they know this. That's why smart money, like the basis of smart money is basically the masses doing one thing and the institutions doing another thing entirely. So what the composing man will do is it will buy at this zone, and when he buys, it creates some kind of consolidation. And generally that consolidation can either be a future distribution or a future accumulation. So what they do is they buy here. Most sellers will want to trade this trend line or double bottoms, double tops, whatever their strategy is. We see the liquidity here being run and all the sellers here being liquidated. Price comes back to test this spring and moves up. This is the preliminary supply, the selling climax, automatic rally, secondary test, spring, the test of that spring, sign of strength, and LPS. And for distribution, distribution is the transfer of buys into sells. So what's the idea behind that? We see these two double tops. That's liquidity. Most people trade double tops. So we see them buy to liquidate that double top. Then some people will see this trend line. They will see this trend line and they will want to trade off the trend line. We see price move up, liquidate them, take them out, take their stops out, moves up again. People that have their sell stops or stop losses here liquidated too, and we see price transfer from these buys into into sells. So basically what accumulation is, if you have a notepad or if you have a jotter, write this down. Accumulation is the transfer, simple definition of it is the transfer of sells into buys, while distribution is the transfer of buys into sells. And that's pretty much the easiest way I can explain it. This is like the volume one of Wyckoff. So yeah, some other gems I will keep them for other videos. So yeah, we see here the preliminary supply, buying climax, the UT, UTAD, test of that UTAD, LPS, and we have the markdown. And don't really get too caught up with the label or the names and all this stuff. That's not really important. Don't get too attached with the labeling. The most important thing is to understand the concepts behind what's going on in this area. And that's basically what I said: accumulation being the transfer of sales to buy, and distribution being the transfer of buys to sales. And when they buy at this point, it creates a consolidation. And a consolidation also creates liquidity in both sides. We see here, for example, this is price consolidating. It creates liquidity at both sides. Yeah, it creates liquidity up here and here. And now it's now up to the smart money or to the institutions, the composite man, still the same thing, different names. It's now up to them to take price where they want to take price to. And we can see something like this happen. They come to liquidate people buying at that point and trigger people that wants to sell and eventually liquidate them, coming back to test out that block and moving up. I taught this concept when I was teaching liquidity inducement in one of my videos. You can check other videos out. So this is basically the same concept or the same idea behind what is happening here. The transfer of the sellers, liquidating those sellers, taking out their stop losses to eventually take price upwards. Yeah. So like Richard Wyckoff, what he did was he took this and he created a rule-based system for the type of swings you can expect in this schematic. What if you backtest? You see the same thing. And sorry about that. If you backtest this, you notice that the schematic may deliver itself in different variations. It actually depends on what's happening and what the composing man wants to do and how it ends up happening, because price move in different ways and it creates liquidity in different ways. So this schematic won't always appear the same. It might be different. Just like a snowflake. If you know a snowflake, snowflake is basically a snow at its smallest. I don't know how to explain it, but a snowflake is common sense. A snowflake delivers in different variations. It's not always perfect or accurate with all the same sides. Same thing with Wyckoff, same thing with price. It delivers itself in different variations. So yeah, what we do in Xcapethematrix is we don't use Wyckoff to predict the direction of price, but we use Wyckoff at supply and demand zones. And I will show you in a minute in the charts. We use Wyckoff in supply and demand zones or our point of interest. And Wyckoff also can be used to understand how price move, but we don't use it to predict where price is going. So you need to note that. So yeah, I want to explain the idea of liquidity being grabbed at these zones, but I already did though. You see these two equal highs, price buys up, and comes back down maybe to fill this imbalance here. When you now put imbalance and other concept I'm teaching on this channel, takes out people that are trying to buy on this trend line, liquidates them, UTAD, the test, LPS, and the markdown. So yeah, what you can do is take this idea and go to the charts, see for yourself, study this at your point of interest. Okay, let me go and do a real charts explanation of Wyckoff and how you can use them to formulate. Okay, you can use them to formulate your bias or your refined entry. Again, I'll say it again. I don't use Wyckoff to predict where price goes. I use Wyckoff to get into refined entries in my supply or demand zones. AUD USD. Let's go. Man, can you imagine? This trade just wicked above my stop loss. Now it's selling. What in the world? Yeah. So yeah, this is my point of interest. This was the supply zone. The 3 hour I caught on when did I take the trade? On Monday, on Tuesday rather. On Tuesday, February 20, February 21st. So yeah, if I zoom in into the lower time frame, this is a 2 hour time frame. I want to go into 30 minutes time frame to show you that idea of Wyckoff, how you can use them to get refined entry. Let's dive straight to it. All I do is win, 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 no matter what. Alright, so I think I have to delete this just for this explanation. So what I'm going to do is I'm going to delete this for the purpose of this explanation. So yeah, this is a distribution schematic. Like I said, it's not always perfect or it's not always accurate. Like the examples on, if you go to stochastics, right here, you can see the schematic that Wyckoff gave out is not always going to be perfect, but you can get out certain ideas, and that's why I said there's no need for labeling, because labeling might just confuse you. It's just to understand what's going on at that point. So we can see the PSY, this one being the buying climax, this being the automatic rally, and the UTAD, sign of strength, breaking of structure here, and we see retrace back to test that spring, and we see price markdown. transformation of buys. See all the buys here, buys here, buys here, equal highs. That equal highs being liquidated. Price come back to fill this imbalance. People that are trying to trade this trend line, happening. Trying to trade this trend line, liquidated, comes back, test this point, and we see the markdown. This is the LPS. See the markdown, see price going upward. So if I did wait this trade, I didn't wait for confirmation entry. If I waited for confirmation entry, I guess this is where I would have entered from, and I would have taken a loss. I would have entered from here. Using this zone as my entry point, I would have probably entered from there, and which would have stopped me out. But still, you can see another opportunity forming at this zone. Swing high, sorry, swing low, swing high, the break of that low, and the test. Yeah, if I was waiting for confirmation entry, I probably would have gotten back in from this trade, but I didn't. I used my risk entry model at once, and I bagged 3.51R, almost $300. So yeah, you can see how you can implement this concept in your own trading. But firstly, you have to backtest. Don't just take people's word for it. Backtest, spend the time studying this schematic. And if you want the PDF of Wyckoff, I have the PDF. You can check my description, join my Telegram channel, and get it. I hope this short video I've explained or I've introduced Wyckoff to you, and I'll be making more videos on Wyckoff as time goes on. Peace. Have a great day. And for the people who live in Nigeria, better vote wisely. I'm out.